Checkity check check checkity check. Yo, what's up, Kirk? Hello, everyone, and welcome to the bright side. Just kidding. Let's go. Let's go. What's going on, Kirk? Good to see you, brother. Always happy to have you here and to be able to shoot the shit here with you. So we're going to talk through some of the price action today and take a look and see what we can plan out for tomorrow. Sound good? Good. Let's head over to the charts and get to it. All right, so today was a good day, and tomorrow we have a couple of things to watch out for. Tuesday, core CPI. CPI is no joke. There's going to be some gaps. There's going to be some dreams shattered at CPI if people are there in a position beforehand. So watch out for that 8:30 a.m. movement. And then, of course, at 1 p.m., there's a 30-year bond auction. You saw what happened between you and ICT. This is a novice trader's paradise. Yeah, no, I'm definitely, even 1 year in, I consider myself a novice, always learning, always adapting, and always honing our trade. But we will get there. I mean, that's the whole point, right? We can go there, talk through some concepts. I've only watched about half of that ICT thing, but I'm glad that he saw the same draws on liquidity that I saw, or rather I saw the same ones that he saw. So when you start to see that, it's good confirmation that you're in the right direction, right? So yeah, so tomorrow, watch out for those 8:30 a.m., watch out for the 1 p.m. I'll be live trading with you tomorrow. I'll be there the whole time except for 4 o'clock p.m. I have a call that I have to hop onto. So most of the day I'll be live trading except for the noon time, as you know, a poor time to trade, so be done by 11. Okay, so that's what we've got to watch out for on that day. So let's take a look over at the bigger charts and see what we can figure out for tomorrow. All right, so as you know, this weekly chart has opened quite strong. We are opening to the high of this 16,257.50 mark. We actually hit it. Am I seeing that right? We hit that at the end of the day. Actually, you know what? I think I need to roll the contract unless it hasn't rolled already. Let me check something real quick. I should have done this before we started, but database management. Don't tell me I need to roll this. Oh god. Oh no. All right, so what's gonna happen is once we roll this contract, all of our charting is fucked. So excuse my language. So what we're gonna do, oh god, I really didn't want to do this. Oh my god, Kirk, this is gonna suck. All right, fine, let's just roll it over. Fuck it, we'll clear everything out. Yes. Okay, that's gonna be it. We will have to make this a little bit longer than expected, but we will be going through it again. So now let's see how screwed up our charts are now. All right, so what we're gonna do here, we're gonna do this all over again, but it's okay. This is a good exercise, right? We will be moving. Actually, we could probably reuse most of these. Just have to shift them a little bit. We'll shift these up. We'll go top down, okay? So on the monthly, we will go top down. Let me go to the daily first, make sure my daily is still anchored at the right date. 12/1. Okay, that's good. So we're gonna go through and tag each of our numbers based on the monthly chart now. So we'll focus on these thick blue lines because this is what I use for monthly. I use a solid 3 pixel here. So monthly intermediate term high, this is a high of 17,702.50. It's funny how ICT himself also did not roll his contracts and traded on the current one as well. Hint, hint. Me and him are closer than it seems. Just kidding. God. Okay, so we have this monthly minus order block here. This open is 17,170.75. 17,170.75. Okay, so we will move this monthly order block here, and we can leave that there with just a different data point now, right? The weeklies, we will come to the weeklies in a bit. Let's focus on these thick lines first, right? So within this area, we had a monthly intermediate term high. That was, and I have to unlock this one first. So that was up here. So we want to lock this once again and make this a high of 16,468.25. 16,468.25. You'll see how quick it is to chart. No bullshit, you know? Monthly order block here. Let's unlock it. We know this order block is actually right here at this open, 15,173, exact number. 15,173, exact number. I'm going through this a little bit quicker. Monthly bullish order block is here. 15,173. Bullish order block here, and we'll keep that bullish order block there. And let me see if there's any other monthly levels that I had. 1 month upswing equilibrium. That's what we want. Let's go grab that. So about here to, oh gosh, the swing has now increased. So originally it was here, but we've gone past that now. So tricky part here is, where do I put the next swing? So I guess this monthly candle hasn't closed yet. So you know what? We're going to take that out for the time being, because you don't need to refer to that until you get down there anyways. So, and then lastly, 1 month bullish order block here. We have this as an open of 12,899. 12,899. Okay. So 12,899 monthly bullish order block way down there. We're not going to refer to that anyways, not yet. We have too much above us, right? So this is that key level that we've been looking for. So that's it on the monthly chart. We're going to head down to a weekly chart next, right? So weekly chart, we need to fix this. We know that there's a weekly imbalance up here. Weekly imbalance that leads to here. What is that? Low of 17,235.25. 17,235.25. Let's make that label appropriate as well. This is a premium CPI high, 1 week. And then this low of that CPI is the high of this candle, 16,940.50. 16,940.50. Okay, so we've got the premium CPI low here, and we've got the correct data point there as well. So we'll drag these down just a little bit. Okay, good. So that is those numbers on the weekly. Let's see, there's a bearish order block here that we needed to mark out, and that is the open 16,741 on the weekly. 16,741 on the weekly, and we will make that a weekly bearish order block here. 16,741. So now we have these monthly levels down, we have these weekly levels down, and we need to look into the range for some of our weekly levels here. Okay, so weekly levels, we have prior week short-term high. That was here. 16,067. 16,067. So that was a prior weekly high, which was, where was that? Here, this one. So let's make that label correct, 16,067 there. Great, we can lock this one. We can lock that one as well, good. There's no other weekly levels down here. This will get clearer as we go down. We'll clear out some more things here. So this weekly imbalance was up here and up here. And this was the premium BISI low. This was the premium BISI high. So this low here was 16,048.25. 16,048.25. And so we have that weekly level being 16,048.25 for the weekly BISI high. And of course, this low here was 15,827. 15,827 exact. And we will make that as well, mark that as well. So we now have the weekly levels locked and loaded here. Lock these as well so we don't move them. And make sure these are over in an area here. Okay, so no more weekly levels up in this area. We've already touched them. There's a weekly short-term high that we also mentioned here. This kind of like ends around here. So this high is 15,680.25. 15,680.25. And that was a weekly prior short-term high. So we have that weekly prior short-term high on the weekly. Good. And from that point onwards, do we have any other weekly levels? We had this weekly discount BISI down here. We marked this one because it's a weekly discount BISI. So we care about the draw. Once it starts to roll in that direction, we care about that draw and liquidity. This low is 15,348.75. 15,348.75. Let's mark that as well. Okay. And then let's mark this one as a 15,160.75. 15,160.75. Okay, so that will be our weekly 1 week discount BISI low. So that takes care of all of our weekly levels there now. We have a monthly level that's down here, obviously. One that we had handled when we were looking at the monthly chart over here, right? This was an open of 15. Did I mark this one? 15,173. I didn't mark this one properly though. There we go. Oh, I did mark it correctly. Okay. So I just put it in the wrong spot. Okay, let me lock that monthly level. And then on the weekly, we have this discount BISI low. Okay, good. And then I think that is it. We have a 15,125 upswing dealing range equilibrium. So we are going to remove this for the time being because something's wrong there and we want a clear chart. Okay. And then there's this weekly level, 1 week previous relative equal low. And then there's a monthly short-term low down there. Let's make sure we had that correctly. So this monthly short-term low here was at 14,347.25. Okay, monthly low of 14,347.25. And this weekly relative equal low, we'll mark that in a moment. So let's go back here. We have that monthly low. What about the weekly low? Weekly prior relative equal low. So that means this was the relative equal lows we saw here. Weekly prior relative equal low. Okay. I'm guessing I was referring to the low of this candle, or rather the open, 14,668.75. 14,668.75. One week prior relative equal low. We'll call this actually, instead of relative equal low, that's a little bit, we'll call this a plus rejection block because we're on the downside here. We see this as a potential rejection block down here on the weekly. And I believe that is it for the weekly charting. We have all the weekly orange and weekly level 2 levels there. So let's go down to the daily next. And let's make sure that we've locked each of these on the weekly level, just so that we don't mess with them. Monthlies are locked. Good, good. Okay, so let's head on to the daily now. So we're at the daily chart now. And let's see, we had a daily short-term low roughly here. And that is a low of 15,417.75. Okay. Man, I should have waited to do the charting exercise. I should have waited to do that. Oh, that's not the right one. Discount BISI high, that's this, and this is what I want. Okay, so daily short-term low. Let's see, do we have any other short-term lows here that we marked on the daily session? No. We had one short-term low up here, though. If I unlock this, we had a short-term low here. And this was a low of 15,932. So let's mark those. 15,932 happens to also be a short-term high, a previous 60-day short-term high at 15,930.50. 15,930.50. Okay, so we can kind of see how this lines up pretty closely. We'll take this as precedence if we get down there, but we have this sent out over, projected out over time. So let's see, daily chart, daily, any other daily levels that we were looking at. Okay, weekly level, weekly short-term high. This is actually jacked up, I believe, from the week, because this was 2. Yep, that was the old new week opening gap. So I need to go back and fix that. Let me go to a lower time frame chart to do that, though. Where are you? Okay, let's see, Monday. There we go. I need to move you guys up here. I'm fixing the current new week opening gap right now. Let's give me a moment here. And let's fix these up. 17 close was 16,303.25. And then the open here was 16,308. 16,308. Okay, so those black lines, we moved up to the appropriate new week opening gap for this week. And then previous week's new week opening gap, I guess I could put that on there as well. Let's see where you are. 12.7. 12.6, 12.5. I don't have enough data. Let's go with 8 days of data. 12.6, 12.5, 12.4, 12.3. The hell? Ah, I see. I need to go back 9 full days to get the whole week of data. Huh, something's weird here. Data series, load 10, load 11 days, let's say. Why are you not loading? Oh, there we go. Okay. Sorry, I just had to load something real quick here. Okay, here we go. There's the previous new week opening gap. Need to just move these gray lines up here and up here so I can give it a rough guesstimate here. Closed around here, opened around here. That's good enough for military work, as ICT would say. Okay, so I was moving these two lines here so we can see a previous new week opening gap and the current new week opening gap as well. So we have that there. Okay, so what is this? 16.4. Where did this high be? 16.468.25. That should be a... That should be labeled up here as a monthly intermediate term high. I thought we labeled that already, but I guess not. Weekly order block, we mentioned that already. That's fine. Let me see if there's any other daily. Daily short-term high, this used to be up here. But now, as you can see, we've already traded to it. So we'll keep an eye on this, but we will not pay as much attention to this, but we will still pay attention to it. So this high is 16.418.50. For those who are new here, this is blitz charting here, but it's kind of necessary. Let's see, is this an intermediate term high or is this a short term high? This is just a short term high. Okay. And then let's see, is there anything else here? We can remove this rejection block. We don't need to refer to that yet. We can remove all this stuff here. We don't need to refer to that, nor is it relevant considering everything moved on us. So we're going to remove a lot of that stuff. Down daily down wick consequent encroachment is this item here. And we would also need to change this up wick. Daily consequent encroachment was up here, and we've already handled it. So we don't need to refer to that anymore, but we do need to keep this down wick referral here. So that's, I need to expand this a little bit just to see a little bit here. We'll say, we'll give this 16.165.25. 16.165.25 will be the consequent encroachment of that daily wick. And that would be on 12.8. Okay. We have that there readily in advancement. 1 week prior short-term high. 16.048 premium BISI high. 1 week We have those as well. That's fine. And then we have a daily bullish order block here that we wanted to tie into. That's this open of 16109.50. We may not refer back to that since we've already referred to it. There's a very low chance of us referring to that, so I'm gonna keep this off our charts until we need it, just to keep it clean. If we head downwards, you can see other areas of liquidity as well. Okay, so that cleans up our chart quite a bit. We have similar charts. We have a weekly, daily, monthly levels here as we want. And then above us, we have our weekly bearish order block, weekly sell side imbalance, and our monthly bearish order block and monthly intermediate term high. So that is how you blitz chart something on the higher time frame. So pause there. Any questions for people? Hopefully that was helpful. You have all my levels there. And if you don't, you can watch this again and slow it down and pause it and kind of see what I'm looking at as well. There's no rush for anything here. And these will translate to the lower time frame, obviously. So when we go down, now that we've got our daily chart figured out, we can look at the 4-hour for just from a perspective of trading. We can get rid of some of these outliers there. Yeah, so from a 4-hour chart, we see that we've busted above and aimed for this intermediate term high here, right? So typically if we are if I go back to the daily chart, typically if we are aiming for above here, we're going to see a impulse movement above here, and then potentially we're going to aim for once we treat this monthly intermediate term high, I imagine that if we don't reject from here, then we'll break above for CPI potentially and aim for that weekly premium SIBI low. That's what I'm aiming for next if CPI numbers are good. Obviously, if CPI numbers are bad, we will end up getting a bit of a movement down to this short-term low. And then, of course, we have FOMC. So there's a lot of big things that can happen that could either drive our market upwards or drive it downwards. So we're at a really key pivot point here. So will the market continue and aim for previous weekly imbalances and monthly imbalances and monthly liquidity, or will it come down to take out and shift basically and take out some of the buy side imbalance which is left in lieu of this huge run up there, right? So that is what we are trying to decipher right this moment. Because this liquidity has been taken, we need to take a look. Okay, how are we looking on in terms of our NASDAQ and E-mini? How are we looking in terms of that, right? So we can actually remove a lot of these drawings as well because they're no longer relevant. They're just here because they are they're definitely relics from back when before we moved our charts. So that's why I kind of loathe and hate these times, because NinjaTrader doesn't have a great way to automatically recalibrate to any particular point in time, and all of these are messed up here. Actually, I might as well just see what kind of drawing objects are here and remove them. Yeah, I could probably just remove all these. Let me see. I'm hoping this doesn't wreck everything, but I'm hoping that didn't just eliminate all my NASDAQ ones. Okay, cool. It didn't, so that's good. So basically what we have here, we have let's see. There's no real major imbalances on the smart money concept. because this is still being made, so we don't know how high this can be. But basically, you can see on the Dow that roughly in that same positioning, you have price going higher in general. Same for NASDAQ. You see price from that position, price heading higher. So for S&P, we need to see if this is also going to take price higher. No SMT diversion just yet. So that's something that we're going to keep in the back of our pockets to look for. And that is it. Let's see. Anatoly, hi Johnny. When you got time, watch this and just relax, at least for the moment. Man, thanks for the effort. I don't know what this is. Let me know. I can't see the links in the chat, but maybe in comments if you drop something, I'll try to look at it, or just tweet me, DM me on Twitter, and then I'll take a look for sure. And yeah. So here we go. Let's go down to an hourly chart then to see what is going on. So now we have our charts going to go. I'm going to save my workspaces so I don't lose any of that. We're saving everything. And so now we have clean charts again. This is great, right? We want this. We like this. So what we want to do now is think, okay, for CPI, tomorrow morning at 8:30 in the morning, what's going to happen? Well, we have, in this week, we started lower, and then we have reached upwards, right? So this either could be we don't know if this is the low of the week here. We don't know if CPI will take us down and FOMC will take all of this out to the downside or not. But likewise, we also don't know, if we go back to the daily, we also don't know how high this can go. Because we're at this key level, we need to see some really key movement here. We need to see either this turn into relative equal highs and we start heading lower a bit, or we need to see us break through this, maybe retrace a little bit and then break through, and then head and aim for and continue to trend up towards that weekly premium CBI high and low, right? So we need to watch out for that, and we do not want to be positioned before CPI. That will rip everyone's faces off. I have traded it and been successful trading it, but there is quite a bit of difficulty in doing so, and you have to get the bias correct. And at best, it is a gamble, a informed gamble. So I don't like to do that on real accounts, and because you can get really hurt on those. So for CPI tomorrow, we need to wait for 8:30 in the morning. You can trade London, you can trade Asia. If we take a look at the 60-minute, right now there's nothing happening in Asia. We have a nice tight little range here. And look at what happens when you have a nice tight range, you know, like this is Friday's range, right? Let's say we took, Friday's Asia range like that. Right? And let's say that we drag this out to, let's see, this would have been to the 15th. And we'll make this fire brick and roughly 10, maybe like 5. Somewhere in between is going to be the sweet spot there. So we have this Friday's Asia range, and we marked it out through the entire rest of the week, okay? So what I want to do is I want to see what happens if I take both Friday, if we take Friday's Asia range, we take Monday's Asia range, which is roughly this, and kind of leave those on there for a thought. If we take this range, we see that we dipped below here very briefly, but these in general are relative equal lows. So would this serve as an initial manipulation upwards in order for us to head downwards? That is the key question that we need to be able to figure out now. Does this market maker buy model treat this as a terminus all the way back from here, right? Since we've achieved that now, does it treat this as a terminus? And do we see the formation of a market maker sell model at this time? Well, it depends on rates, right? It depends on what the FOMC rates are come Wednesday. And that on a higher time frame is going to drive, those yields are going to drive where the market goes next, based on sentiment of those. So we're going to keep a close eye on what numbers come out on Wednesday, and then that's going to help drive the rest of the month's price action. So right now, right this moment, there's nothing on the hourly that we really see could be a high draw on liquidity, right? There's nothing below us that we could possibly see right now. And wait, let me see what happened here. What happened to my charts here? Oh, okay, I see them. Never mind. So yeah, I mean, yes, there are levels above us to hit, but is there anything, if we scroll all the way back over, is there anything between this monthly intermediate term high and these levels that we could potentially aim for? So that's the question that we need to now start to answer, is if we trade above this area here, and keep in mind, this is that level here, that's that weekly bearish order block here, right? Before a weekly premium SIBI, what could we trade to on the hourly? Well, this looks like relative equal highs, right? So this would be the first, this sell side imbalance low would be the first area of liquidity. Next, we have within that, we have a short-term high up here on the hourly, followed by 2 relative equal highs, 3 relative equal highs up here near the monthly bearish order block, and of course the high side of that weekly wick, or sorry, that weekly sell side imbalance. Of course, above us we have this major, you know, all-time high there. Can we get up there? Yes. Will we? Don't know. Really depends. But right now, I've seen the commitment of traders, and as of last Wednesday, it still is like the commercials who drive the market and have the best idea of what commodities they need to be purchasing or selling. They are positioned with the highest net shorts they have so far. It's not like an insane extreme number, but it is up there. So prices can still keep rallying as they hedge to the downside. I would need to see what happens in Asia and London if we are to continue. I would expect some measure of retracement here. If we go down to a 15-minute chart. So this is the current Asia range, right? Let me see if I can put these across all charts. I don't want to put too many of these, but I do want to put Asia's current range on the chart, because that is going to help draw what occurs in the other segments of this price action. So let's say that Asia stays within this range. We would need to see if we drop down a bit first, maybe into this bullish order block, maybe down here to take out the rest of this buy side imbalance, hit the new week opening gap, and then head higher. Perhaps that could be a play. Otherwise, we would potentially break upwards, kind of see less Asia low, kind of break upwards, come back to retest Asia's range, and then head higher. So there's a few different models we can look for tomorrow. All of them rely on us being careful, not trading CPI, not thinking we can gamble on CPI. Just wait until and trade afterwards. There's going to be plenty of plays. Okay? Going to be plenty of plays. So that kind of concludes our charting exercise for the day. You now have the micro NASDAQ monthly, weekly, daily values here. You can, if you missed it, you can always go back to this chart and pause it here and write down and see what kind of levels that you see what kind of levels I see what you see that I don't, and what I see that you don't. Kind of use those to your advantage there. I'm looking on the chat. I don't see any questions, so I hope that made sense to everyone. I hope that blitz of a charting exercise was entertaining and helpful for those who are also tracking NASDAQ with me. Yeah, I mean, I think you can kind of see how quickly, once you get the hang of it, how quickly you can kind of chart, right? It's not that difficult to get the big wig items. Now, every day, it's going to be a little bit more difficult because then you have to go in, you have to look for your local relative equal highs, like ICT pointed out. Where's the draw on liquidity? Oh, it's this monthly intermediate term high that we have down here. Let's make sure we have that. And then, we saw that price broke out of Asian range right before New York session and then started to head higher in New York session. Those are little subtle things that that even I learned today to watch out for when you see a consolidation like we did in Asia and London. So that was really, really neat to learn that from ICT today. So for those who are trading London next, you have a couple of things below you to tackle. Let's go to a slightly higher time frame. Let me see if there's anything here. Yeah, so on a 90-minute, you've got a bullish order block here right below the new week opening gap. You have a giant 90-minute fair value gap here. You've got, on the hourly, you have a bullish order block beneath there, as coupled with a buy-side imbalance, which is still here too, and a new week opening gap. So price could potentially head down there. If it doesn't want to head down there, well, one of the order blocks that it barely revisited, or maybe it didn't touch this at all. The high is 16,400. The low is 16,401. So it didn't even touch this bullish order block before it headed higher on the hourly, which is strange. Usually when price wants to go somewhere, it's going to go back and tackle a bullish order block first. So definitely make sure that you have your Asian range set out. If you're trading London, it's really important for you because let's take a look at a lower time frame here. So for instance, today, if you had the Asian range marked out for you here, then you would have known that you have movement outside of this range on London. So in order for us to move higher, you could have expected a run on stops down below here, and then for us to head higher. Similarly, if we take a look at the Asian range here, so this is at 20, let's see, 21, 22. Let's see. 0 GMT to EST, 8 p.m. to 9, 10, 11, 12, 5 GMT to EST. Let's see, 5 GMT is 12 a.m. So 11, 10, 9, 8, 7 would make us the 12, 1, 2, 3, 4, 5, So here we go. 19:00 is 7 o'clock. 20, 21, 22, 23, 24. That's 0 GMT. Zero GMT, 8 p.m. So 20. So 1, 2, 3, 4. So this range that you see here currently is the Asian range. And actually it's not this full range. It's this smaller range here. So let me pull this up. So today's Asian range is like this. So you kind of see how today's Asian range dipped below, took out sell side, and then headed upwards. Similarly, we need to see how price is going to trade over here as we finish out our Asia session. Currently, we can clearly see that it's within this range, but we also aren't going to be staying on forever watching it for London. So that's all I would keep on my charts for the time being, and I will wait for London to form. I'll see what happens in London, and we'll go from there. If I see continued support at this monthly intermediate term high, then I would consider a breakout, a retest, and a continuation if we are going to be trading London, but we are not. We're going to be asleep. So yeah, that's about it. Let's see what else we got here. Okay, any questions? Any questions going on right now? Let me see. Okay. Don't see any questions here, so I think that's really it. Phenomenal day today. Let's see. Keep in mind on the weekly, remember, every single week there's an open, a high, a low, and a close. Will this week be a week where we take only this wick and keep that as the low and continue expanding higher? Or are we going to reject off of this and now like pitter patter between these two key levels? So that's a question I can't answer yet. We've already taken a key point of liquidity, so I would expect for us to retrace a little bit, with the caveat that December is still bullish. There are still buyers here, and we could see this run into January as well. So with all that combined, that's what I'm looking at right now. I'm thinking we are going to head higher, but we need to see this intermediate term high. We need to see displacement all the way through, and we need to see it come retest. So, yep. Ray, thanks. Yeah, absolutely. Anytime. So hopefully this was helpful. If this, we've changed over to the March contract for micro NASDAQ. So this is what we will trade from now on. As you might have seen in ICT's recent live stream, he does pull up the charts and looks at open interest and volume, and the new contract has more volume now. Not to say that you can't trade the old contract. I've done that before, but you should be trying to move everything over to your new instrument, so that, yes, that does mean in NinjaTrader you have to recalibrate everything, but you saw what it took. It took me what, no greater than 20 minutes. So you'll get to that point too when it becomes easy to chart, and then you'll have all your key levels there as well. So, all right, I think that's it for tonight. We've been on long enough, and we're gonna say good night, go get some sleep. I'm gonna go finish off the rest of that ICT video as I get ready for the trading day tomorrow. I will be on tomorrow. One thing to be wary of is even if I'm on at 7 o'clock, yes, there is a trade that can happen prior to and leading up to CPI. Sometimes it doesn't pan out, so just be wary of that. I will try to be on at that time, just so that we can see if there's any plays that can be taken beforehand and closed out beforehand as well. Yeah, I believe that's really it, though. You want to be trading after 8:30 if at all possible, and waiting for those key points in time to take the trade where the trades will set up. So, yes, that is it for tonight. We will see you bright and early tomorrow. I will be here with you here trading, and it will be live trading because I'm taking the days off except for 4 p.m. So, again, none of this is investment advice. These streams are 20 seconds delayed anyways, so you shouldn't be taking any positions. If you see me take it on YouTube, you're already too late. But nevertheless, I am not a licensed by the CFTC. I'm not providing any financial advice, and take trades at your own risk only if your model says it is your trade. With that, have a good night, everybody, and I hope this was helpful. I hope this has been, I hope it was good. Today had a lot of really good examples. I hope to continue to tape read with everybody tomorrow and have that serve as some more examples of tape reading. So have a good night, everybody. We'll catch up soon. Take care. Stay hydrated. Make sure you drink some water. Get to bed. All right. Take care. Good night, everybody.